Welcome back to the Trading Bootcamp Part 6. Now, in this lesson, we're going to look at supply and demand. Now, supply and demand is the primary reasons the market moves. So we're going to dive deeper into that. But more importantly, we're going to look how we can find the best supply and demand zones to find the highest probability trade locations in the market. So let's get stuck into it. So a really important concept to understand is balance and imbalance. Okay, we know that the market is constantly in a fluctuating state between balance and imbalance. Okay, the market is moving between balance, periods of imbalance, more balance again, imbalance, and so on. Okay, the markets are constantly moving, and we know this is because of supply and demand and liquidity, which we covered in the previous lesson. So if you haven't seen that, go check out the liquidity lesson. Right, so supply and demand is everywhere. It's the primary reason the market moves. Buyers and sellers, supply and demand. Okay, but when we're looking at supply and demand in the principle and the concept of how we want to trade it, we want to find the areas where the largest imbalance occurred. Okay, where did the market go from a state of balance to imbalance, meaning a big imbalance between buyers and sellers? Okay, so when it goes from an area of balance like this and it moves to the upside, we call this demand. Okay, this is a demand zone, right? Balance, the buy orders exceeded the sell orders at this level, so price had to move higher to match all of these buy orders with willing sell orders. All right. And now the opposite is also true. When there's a balance and then it moves in a state of imbalance to the downside, it means at this level in price, there was more sellers than buyers, meaning price had to move lower to find willing buyers, because we know that every sell order has to be matched with a buy order, and every buy order must be matched with a sell order. And this is what causes the markets to move, because the market is constantly looking to pair buy orders with sell orders and sell orders with buy orders. So it's really important to understand that supply and demand is everywhere on the chart. Okay, we can just see it here in this ranging type environment. We can see at the lows, there was obviously more demand than supply, because each time price came into this level, we moved to the upside. Okay, so there was more buyers here, causing price to move higher to pair those orders. The same at the top of this area, right? Top of this range, we had a lot of supply. Each time price pushed into these levels, we sold off, okay, causing price to move lower to pair all these sell orders with willing buy orders. Okay, so very important concept to understand that there's constant battle between buyers and sellers in the market, and the price and the market will move to match those willing buyers and willing sellers. So now that we know that supply and demand is everywhere in the market, and we know it's when market goes from a state of balance to imbalance, we need to learn how we can find the best supply and demand zones in the market. Okay, so there's a couple of key things we can look at when we're trying to identify the strongest supply and demand zones that we're looking to trade from. All right, so three things we're going to look at, and we'll break these down one by one. Okay, we want to find the zones that cause the largest imbalance. Okay, we want to find zones that broke structure, broke those 3 candle swings that we talked about in the previous lessons, and also swept liquidity. Okay, we covered this in depth in the previous lesson on liquidity, why it's very important to see liquidity swept and a liquidation before we trade in that direction. All right, so let's go through the diagrams and we'll break this down nice and slowly. Okay, so caused imbalance. This is quite self-explanatory. Okay, the areas where the price goes from an area of balance to imbalance, the bigger this imbalance is, essentially the more aggressive the move away is, the larger the signal of the imbalance between the buyers and the sellers. Okay, the demand and the supply. So we want to find the zones where price reacted very strongly and moved quite aggressively. Okay, quite inefficiently and quite aggressively. Now, we want to see it breaking structure. Okay, so a 3 candle swing, we want to see the demand at this zone push to the upside and break structure. Okay, so we can go ahead, you can mark these points on your chart where you see the 3 candle swing is broken to the upside. Okay, in this example, we're looking at demand. We want to see price move aggressively, inefficiently, and close above this 3 candle swing, showing us that demand here was stronger than the supply at this level. Okay, it broke the level to the upside. And lastly, we want to be trading the zones that swept liquidity. Okay, we can see the 3 candle swing down here. This is this reversal pattern in the market we were talking about earlier. A low was formed, there was the high, pushed down, it swept the low. Okay, so all stop loss orders under this low get triggered in this move. And then we see the move in the opposite direction, showing us the big imbalance between buyers and sellers. This is a strong demand zone. You'll want to be trading from these areas. All right, now we can have a look at the supply zone. It's exactly the same, just in the opposite. Okay, we want to see the cause, the large imbalance, so an aggressive move to the downside. Okay, we want to see this 3 candle swing get broken, signifying strength, okay, because we know that the level here was enough buying to close and break this high. So when price pushes and breaks this low, it's showing us that there's more sellers than buyers, and sellers are in control in the market. And lastly, we want to see this strong sweep of liquidity. Okay, we know all about this. There would have been stop loss orders above here. So this sweep above shows us that these traders have been liquidated, giving us fuel for the move lower. Okay, filling all of these sell orders here because of the buy stop orders that would have been at this level. Okay, so when we have these strong demand and supply zones, we can start to build trade ideas if and when price revisits these levels. All right, so now let's jump into the charts and look at some really good supply and demand zones, how to identify them on the chart and how to mark them up and how we can trade them. Alrighty, the first one we're going to look at here is a demand zone. So we go through our checklist, okay, and we're identifying this area in price. All right, firstly, we want to see an aggressive move away, tick, we got this. Then we want to see the 3 candle swing broken. Right here is what we got. Okay, so we'll zoom in on the actual zone while we go through this checklist. Okay, so we had the impulsive aggressive move away, broke structure, 3 candle swing, tick, and swept liquidity, perfect. We had a low here, the high, the low formed and pushed away, leaving this really clear demand zone at the low. Okay, and then we zoom back out and we can see exactly what happened when price came in and revisited this level. Okay, so this is where the market went from a state of balance to imbalance, broke structure, swept liquidity, ticked all our boxes, high probability demand zone. So when price revisits this level, we can either place an order here to take this trade from this level, stop loss going behind the zone, or we can jump to a lower time frame and take a precision sniper entry and wait for our entry trigger inside this demand zone. Okay, so this demand zone is our context and location. We understand why it's going to be strong in the market because of the big imbalance caused there. Broke the structure to the upside, price revisits it, moves to the upside. But it's pretty important to understand, why is price going to move just because it comes back to this level? Okay, just because there was demand there previously, why is there going to be demand there in the future? Okay, now the main reasons is, number one, order stacking. Okay, so big traders that got in at this position when price moved away, they might have placed a load of orders and maybe only half of those got filled. Okay, so there's going to be order stacking at this level. The other reason is defending position. So big traders that got in this level, they might have got all their orders filled, buy orders, but when price comes back, they place more buy orders to defend their original position so that price does not move against them. And lastly, we look at speculators, traders like you and I, that are speculating and understanding that this was an area of balance that turned into imbalance, a lot of demand at this level, and we can look to trade from this location. So it's really important to understand those 3 key reasons why supply and demand works. And it's all about balance and imbalance in the market. So now let's look at the opposite side and look at a supply zone. Okay, so we're looking here and we'll zoom in once again to the zone itself. This one's a little bit more tricky to see, but it's definitely there. Okay, we've got this imbalance push down, okay, aggressive move down. We had this break of structure in here, the 3 candle swing. This is the low here. Would be much more visible on a lower time frame, but we can definitely see the low, the high caused, then the big impulsive move down. We swept liquidity, okay, stopping out these early traders here and also triggering these stop loss orders. So this is a strong sign of reversal in the market. And then once we got it, price came back into this zone, reacted perfectly to this unmitigated supply. Okay, price had not revisited this zone. All right, so it's important to note that you don't want to keep trading these zones over and over again, okay, because orders are going to be getting filled. So first revisit is the best for a supply and demand zone. So it's still valid, it's unmitigated. Price moves in here. Just like with our demand, you can look for either placing a limit order in the zone, right, and then you target your compression liquidity down here. You got some equal lows down here, or you jump to a lower time frame, right, and you look for your entry trigger in here and see what you need to see in the lower time frames to get shorts. Okay, and we know about the entry trigger, the high, the sweep of liquidity, the break of structure, the retest, and push to the downside, but more on that later. So supply zone, exact same principle as demand, just in the inverse. Okay, area of balance caused to imbalance. We know there's going to be order stacking, traders defending positions, and speculations in this zone. So supply and demand zones, very, very, very powerful tool. Okay, we know supply and demand is the primary reasons the market moves. So go ahead and start identifying these unmitigated, very strong supply and demand zones on the chart. Okay, ones that sweep liquidity, break structure, and have an impulsive move away. And even better, you can start using them in high probability locations. And we're going to look at support and resistance in the next lesson. And if we can start lining up these supply and demand zones at key support and resistance levels in the market, we can make them even stronger. So as always, any questions, drop them in the comment section below, and I'll see you in the next lesson.